Imagine waking up to see extra cash in your bank account. No, this isn't a get-rich-quick scheme or a magic trick. It's called dividend investing. It is a cornerstone of building real wealth in 2026. In this video, I'll break down exactly what dividends are. We will keep it simple, legal, and completely realistic. Think of it like owning a fruit tree. You don't just wait for the tree to grow big. You get to eat the fruit it drops every single season. By the end of this video, you'll know how to start your own money tree. If you had one extra income stream today, what would it be? Comment below. When a company makes a profit, they have two main choices. They can put that money back into the business to grow. Or, they can share that profit with their shareholders, that's you. A dividend is literally your thank you check for owning a piece of the company. You don't have to work for them. You just have to own their stock. It is usually paid out in cash, directly into your brokerage account. It's the best way to see if a company is actually healthy. If they are paying you, it means they are actually making money. Search for a company you use daily and see if they pay a dividend yield. Why would a company just give money away? It's about attracting long-term investors who believe in them. Stable companies want people to hold their stock for years. By paying dividends, they prove they are reliable and strong. It creates a win-win situation for everyone. Note: not all companies pay dividends. High-growth tech companies often keep their cash to innovate. But mature companies, the Goliaths, usually share the wealth. Look up the Dividend Aristocrats list online for reliable payers. Do you prefer growth stocks or dividend stocks? Tell me why. You can't just buy a stock today and expect a check tomorrow. First is the declaration date, when the company announces the payment. Second is the ex-dividend date. This is the most important one. You must own the stock before this date to get the payment. Finally, there is the payment date. That's the day the money hits your account. Missing the ex-dividend date by one day means you wait for the next cycle. Most companies pay every 3 months, but some pay every single month. Set a calendar alert for the ex-dividend date of one stock you like. Now, let's talk about the real magic. The Dividend Reinvestment Plan, or DRIP. Instead of spending your dividend, you use it to buy more shares. Now, those new shares will also pay you dividends next time. This creates a snowball effect called compounding. Over 10 or 20 years, this can turn a small portfolio into massive wealth. You are using the company's own money to buy more of their company. It is the most powerful way to build wealth with zero extra effort. Check if your trading app has an Auto Reinvest, or DRIP, button. How many years are you planning to invest? 5, 10, or 30? Let's see your vision. Let's be real, dividends are not 100% guaranteed. If a company hits hard times, they can cut or stop their payments. Always look for a payout ratio that isn't too high. You want the payment to be sustainable, not a desperate move. Don't just chase the highest percentage, look for quality history. Dividend investing is a marathon, not a sprint. It requires patience, discipline, and a focus on the long term. But for those who stay consistent, the rewards are worth it. Start small, stay educated, and keep growing. Commit to reading one article about value investing this weekend. Thanks for watching. Hit subscribe for more wealth building tips. I'll see you in the next one.